Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. We're going to kick off with a quick review of key events heading into next week. There really isn't too much in the economic calendar. We have a pretty clear run at the markets over the next 2 weeks in terms of economic data. However, a key event we have to factor into our trading plan for next week is the Ukraine-Russia situation. That's because we saw a big risk-off move in the markets at the end of Friday last week around 6:30 when news broke that Russia, according to US analysts, is set to invade Ukraine on Wednesday. So we have to take this into account, and in today's video we're going to go through setups which are going to allow us to play this event either way it plays out. And so in one sense we have to treat this almost like an interest rate decision where we have multiple setups ready to go, and then when we get the outcome of the event you can trade those setups in that direction. We're then going to look at the scorecards heading into this week, and I also want to just have a quick preview of last week. Last week was a very tough week, and I want to just have a quick look at what played out last week, and also of course the scores heading into this week and how we can use those to navigate the Russia-Ukraine situation. Once we've done that, we'll look at the individual currencies as we always do, just to compare them to the scorecards before moving on to the currency pairs themselves, looking at the best setups heading into next week before finishing with stocks, gold, silver and Bitcoin. So with that said, let's get into today's video. So if we start just as we always do by having a quick look at the economic calendar, we do not have coming up this week really anything we need to plan around. We do have CPI data out of the UK, which can cause volatility in the markets, a bit like we saw last week with the US CPI. We also have the same coming out of Canada, and we have some unemployment data coming out of Australia. So all these things can cause volatility, but these are not situations which tend to reverse markets like an interest rate decision that we would need to pay attention to. And if we shoot to the following week, you can see again we have a pretty clear run. We have a US bank holiday on Monday, but apart from that, the only thing we really need to pay attention to in the following week is the interest rate decision out of New Zealand. When you have this, and we do have some GDP data out of the US as well, but primarily when you have these interest rate decisions, you can see the markets kind of correcting into those. This is 2 weeks out, so we can look at the New Zealand pairs this week, but just bear in mind that the closer you get to this, the more chance you have of those markets being corrective and turning neutral into those events. So there really is nothing more to look at in the economic calendar over the next 2 weeks. And as I say, the key event we really need to pay attention to was this warning from US analysts that Russia is set to invade Ukraine on Wednesday of this week. And we're going to have a look in the markets at the risk-off move that caused and what it means for the markets heading into next week. Okay, so looking at the scorecards heading into next week, you can see that there are some significant changes which took place last week. And in last week's video, the euro and the pound were the two strongest pairs that we were looking at, and the Aussie and the New Zealand were the two weakest. And my two favorite pairs last week to the upside were Euro New Zealand, EurUsd. And I also noted that although I didn't prefer them as much as the Euro pairs, I was also looking at Pound New Zealand and Pound Aussie. If you go and have a look at Euro New Zealand this week, which is something we are going to do when we look at the charts, you will see that we had a down week in Euro New Zealand. This was a market I traded last week, and for me personally, it was a losing week because I was focused on trading Euro New Zealand to the upside. I didn't take any significant losses because that's what risk management is for, but it was the first week this year that I finished in the red. So if you made money last week, hats off to you, amazing job. It was a very, very tough week to trade. So one of the things I asked myself is, okay, well, why was that the case? And was there something could have done to avoid that situation last week? And the answer is that one of the problems we faced last week, first and foremost, was the fact that you can see the dollar and the euro are both displaying strength. When you have the euro and the dollar in the same category, it tells you the markets are lacking direction. They're very, very choppy. They're correcting. Because when you have strong risk-off moves, you will see the dollar very strong and you will see the euro very weak, and you'll often see the Swiss franc and the yen strong with it, and you will see the commodity currencies lagging down with the euro. That shows clear market direction to the upside for the dollar and the risk-off pairs. And vice versa, when you have strong risk-on moves, you will see the dollar and the safe haven assets like the franc, like the yen, down at the bottom of the scorecard, and you will see the euro, the pound, and especially the commodity currencies at the top. So the first issue we had going into last week was the fact that the markets are lacking clear direction. When that happens, opportunities tend to dry up. That has not changed this week. We've seen a weakening of the US dollar slightly, but we still see the dollar scoring a +1 and the euro scoring a +2. So the first takeaway from last week is going into this week, we do not want to take lots and lots of risk. I am going to limit my trading. I'm only going to be taking a small amount of trades because, in my opinion, the market conditions are not good enough to be taking large amounts of trade or large amounts of risk. So that's my first and primary view heading into this week in terms of the Forex markets. The second issue we had last week as well was the New Zealand had been scoring a -4 for a number of weeks, and this was suggesting a bottom in the New Zealand was coming. And by definition, if you get commodity currencies bouncing, you see the dollar selling off as well. So again, you could think of this as being overbought +4, oversold -4, and then a strong bearish bias, neutral, 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 strong bullish bias, or sorry, just bullish bias here, and then strong bullish bias is 3, and then overbought is 4. So what we saw last week was we saw New Zealand coming off the lows, and actually in hindsight that was a sign that we were seeing some strengthening coming into the New Zealand. And so we were in a position where the strongest and the weakest currency was Euro New Zealand, but the New Zealand was sort of strengthening somewhat. So that was the second takeaway from last week as to why I believe Euro New Zealand failed to perform. If we look at the scorecards for this week, you can see once again the New Zealand, after coming off the lows here of -4, i.e. oversold, you could think of it as that. I don't really like oversold and overbought because it brings in a kind of contrarian counter trend mindset. However, the easiest way to think of this is a place where you'd expect to see a bounce. You could call it oversold. And the momentum from -4 to -3 in the New Zealand continued last week, and we saw a continued strengthening from bearish or strong bearish bias to neutral, because we now sit at -1. And that strengthening of the New Zealand from a -3 to a -1 is what caused the reversal to the downside in Euro New Zealand. So where does that leave us going into this week? Well, the first thing to note is we have more changes in the currencies. Why? Because the market is in a potential reversal condition. So the market is only ever in 3 conditions. It's either trending, correcting, or reversing. And as we discussed in last week's video, the dollar is currently correcting and it could possibly be reversing. And this is why we're seeing such changes in the currencies and why opportunities are somewhat drying up. So we did see the dollar weaken somewhat, and the fact that the dollar dropped from 2 to 1 and the euro continued to score +3 is suggestive of a top in the dollar, because if the dollar was going to continue to rally strongly, we would be seeing the euro weakening and we would be seeing the US dollar strengthening. We are not currently seeing that in the scorecards, and at the same time, the second thing to add weight to a potential US dollar top is the fact that we're seeing money coming out of the safe haven assets of the yen, of the franc, and we're seeing money coming back into the commodity currencies, the risk-on currencies like the Australian dollar, like the New Zealand dollar. So if we take the highest scoring currencies here, you can see Euro Japanese yen is a market that I favor the most going into this week. That is a risk-on move. Euro Swiss franc to the upside is a risk-on move. That's my second favorite pair this week. And we also have pound yen to the upside, which is a risk-on currency pair if you're looking for the market to move to the upside. And we also have pound Swiss franc to the upside, which again is a risk-on move. So those are my 4 favorite pairs going into next week, and I'll explain how we can tie this in with the situation in Ukraine. And interestingly, the scorecards are also throwing up potentially Euro New Zealand to the upside still, pound New Zealand to the upside. They are risk-off moves. And what this allows us to do, it allows us to create setups for both risk-on and risk-off heading into next week. And once more information comes out, you'll be able to pivot to either the risk-on pairs or the risk-off pairs, depending on the outcome of the news as the situation in Ukraine develops. So to summarize this in 3 points, the risk-on currencies are strengthening vis-a-vis the risk-off currencies, and Euro yen, Euro franc, pound yen and pound franc are my 4 top currencies going into this week, which are risk-on moves. The second thing is that the euro and the dollar are both still scoring in the top half of the scorecard, meaning that the markets are corrective, the dollar is lacking direction, and that we should be taking less risk and really only taking the best trades as we see them. Or even if you wish, not trading at all, that's entirely up to you. I personally always like to take some risk, but when the euro and the dollar are scoring in the same section, either strong or weak, I keep that risk to a minimum. And finally, we also have risk-off setups in the form of the euro and the pound against the New Zealand dollar, which we can pivot to if we start to see negative news coming out of the Ukraine situation next week. Okay, so let's have a look at the individual currencies first very quickly, just to get an idea of what they're doing, match them up to the scorecards, and then we're going to move on to the best pairs that I see heading into next week. And I'm going to give you my base case scenario of what I think is going to happen with the Ukraine-Russia situation and what my primary plan is in order to trade that. To start with, I've zoomed down to the 4-hour chart here for the DXY just to show you last week how difficult trading conditions were. You can see we moved absolutely nowhere in the DXY. And when the DXY doesn't move, very often it's very hard to find trading opportunities. And then we rallied higher, we whipsawed lower off the CPI data, and then we continued to rally and we finished the week in this area. That kind of price action is extremely difficult, and this is why heading into next week, once again, if you are taking risk, if you are assuming risk, you want to keep your risk small. Yes, this was primarily a function of the CPI data that came out last week. However, you see this kind of choppy price action, as I said, whenever you see the euro and the dollar both strong in the scorecards, or when you see the euro and the dollar both weak. And the dollar itself technically is still in an uptrend. This is a high, and this is, as it currently stands, a high-low. But as you can see, it's not really going anywhere in a hurry. So what we're seeing here technically justifies the score of +1 in the dollar. It's kind of bullish to neutral. Moving on to the euro, and I've zoomed out back to the daily chart just so we can get a bigger picture of what's going on here. I did mention last week that we'd started to reverse to the upside, or we were in this market condition where we could be potentially reversing, and that would come with a top in the dollar. And it looks like we're forming an inverse head and shoulders. And I did note in last week's video that we may actually just pull back from these highs in the euro. And I even suggested that could cause a few problems in the Euro-Aussie, in the Euro-New Zealand pairs that we were looking at last week. And so, in order to offset any problems in those pairs, you could add in some of the yen pairs, like Euro-Yen, like Pound-Yen to the upside, like US Dollar-Yen to the upside, which we discussed last week. And these were kind of hedges as to any problems in the Euro-Aussie, Euro-New Zealand pairs from last week. And in fact, anybody who added those yen pairs into their plan last week to the upside, at least until we had that news on Friday at 6:30, would have really hedged any of those positions in Euro-Aussie, Euro-New Zealand. Now, even though we went through all the data and we identified any potential problem in the Euro-Aussie, in the Euro-New Zealand pairs could be offset by those yen pairs to the upside, and a couple of those, at least one of them, I know Euro-Yen, I think went straight to the target. Despite that, I actually personally missed my trade in Euro-Yen, which I was trying to get to offset or to hedge those Euro-Aussie pairs. So I ended up only in the Euro-New Zealand, Euro-Aussie pairs. And as a result of that, I ended up in the red, as I said earlier last week. So coming into this week, you can see we have a score of +3 in the euro. And what that's suggesting is, it is suggesting that this is going to continue to the upside. But technically speaking, you can see the technicals haven't caught up with that. And really, this is back almost in the middle of this range and potentially, as I said, forming a right shoulder. And whether the euro continues higher or it ends up coming down and starting the next bear leg to the downside could very well depend on the developments of the Ukraine situation going into next week. So I am still bullish on the euro going into next week as it currently stands. Next is the pound. Now the pound is also slightly choppy, as you can see here, over the last 1, 2, 3, 4, 5, 6, 7, 8 days. Hasn't really gone anywhere. However, we are still structured to the upside, and there is no real change here in the technicals in the pound. So I am bullish on the pound. Next is the Swiss franc. Now the Swiss franc is structured to the downside, and this is being picked up by the scorecards. This is showing you actually this is quite a bearish currency, not just individually here, but relative to all the other currencies as well. So I do favour Swiss franc shorts heading into next week. Bear in mind this will be a risk on move if we get Swiss franc decline to the downside, and again when we look at the pairs I'll go through how I think this is likely to play out next week. We also have the Japanese yen structured to the downside. It is in a downtrend. In fact, last week it made a new low, so I am bearish on the yen. However, any further declines in the yen would be risk on, and you would really need to see a resolution of the situation in Ukraine for further declines in the Swiss franc, in the Japanese yen. Next is the Canadian dollar. The Canadian dollar really hasn't gone anywhere. It is bullish to neutral in the scoring system compared to the other currencies, and relatively speaking it's actually slightly bearish. And I haven't been interested in trading the Canadian pairs for the last couple of weeks, and going into next week I still don't think this is a fantastic pair to be involved with. Next is the Aussie. The Aussie is currently structured to the upside, although as you can see again, just like the euro, just like the US dollar, it's pretty much back in the middle of this range all the way back from December. So there's no real significant strength. It's kind of neutral, and we're seeing this in the scorecards. And finally, the New Zealand dollar. the New Zealand dollar is actually still structured to the downside, and we are forming what looks to be a bear flag here for further declines. Now, further declines to the downside in the New Zealand dollar would probably mean Swiss franc Japanese yen to the upside, because a sell-off in New Zealand dollar is a risk-off move. And so this is what allows us to go into next week to play those risk-on, risk-off setups both ways around this Ukraine situation. Okay, so let's move on to the markets themselves, and let me give you my base case for what I think is going to happen with the Ukraine situation. Obviously, I do not have a crystal ball. I do not know for sure what's going to happen, but my base case is as follows. You can see we're looking at the Aussie yen chart here. This is the most risk-on, risk-off chart because the yen is the most risk-off currency and the Australian dollar is the most risk-on currency. So this is the most risk-on, risk-off pair. And you can see when we got the news on Friday, we had a big sell-off to the downside in Aussie yen, although the trend is still to the upside. So we still have the trend risk on, but we have a big sell-off or a risk-off move to the downside within an overall structured trend to the upside in Aussie yen. Now, what I think is going to happen, and what is my personal base case for this, is the following. I think we're going to see a similar scenario here to what we saw previously a couple of times in 2017. If I take you back, first of all, to the 29th of, or 28th of August, in this case it was the 29th in North Korea, but the 28th of August here, 2017, when we had this big sell-off, very similar to what we saw on Friday in Aussie yen. This was a risk-off sell-off, and this was when North Korea fired missiles, 12 missiles over Japan, and we saw a big risk-off sell-off. Then we saw the markets rally as fears faded over the initial risk-off move in the markets, and concerns of any escalation of the events dissipated. If we continue further back, we also have another example here, and this was on the 7th of April, the morning that the US bombed Syria. If you remember, the US president at the time, Donald Trump, bombed Syrian airstrips, and we had this initial sell-off to the downside in Aussie yen before rallying when concerns over the situation dissipated. Now, yes, in this scenario, we continue to the downside, but that's because the overall market was in a downtrend. But you can see immediately after the sell-off, we began to pull back and retrace the risk-off move that happened on the initial spike down. So I do think the most likely situation is that we see a similar thing play out in the markets. The scorecards are signaling a shift to the risk-on currency pairs, and therefore, euro yen to the upside, euro franc to the upside, pound yen to the upside, pound franc to the upside, remain, especially these two, euro yen and euro franc, they remain my primary pairs that I'm looking to trade next week. And I'm looking for those pairs to rally or to perform on the basis of fears dissipating over the news yesterday. And that would, of course, be because news comes out which points to an improvement in the situation in Ukraine. Today, there is a meeting supposed to take place between US President Joe Biden and Vladimir Putin, and we may see some good news come out of this, maybe even some agreement which alleviates market fears, and we see a repeat of the bounce we saw in 2017 with the Syria airstrikes and also with the North Korean missiles over Japan, which we looked at just a minute ago. So that is my base case, and if news does come out which points to an improvement in the situation, I do think we're going to see the risk-on currencies like euro yen, like euro franc, pound yen and pound franc performing, and we may even see Aussie yen and Aussie franc performing as well, although I favour the euro pairs here. But as you can see, I've highlighted in blue the risk-off pairs, and they will be the pairs to pivot to look at and assess for potential trading setups if we get the opposite taking place, and in fact we don't see an improvement in relations in the situation, but we see a deterioration, then it will be the blue markets that will outperform, not the gold markets. But as I said, my base case is for an improvement of the situation, and that's why I favor these gold markets over and above the blue markets next week. So starting with crude oil, we saw a rally to the upside on the news last Friday. Why did we see this spike to the upside? This was on concerns or supply concerns of crude oil should Russia get into a war with Ukraine. However, I have been saying over the last few weeks that we could very well be seeing a top coming in the near term in crude oil. And if my base case scenario is correct, and that we do actually get an improvement in the situation Best case scenario, we get some kind of agreement between the US and Russia starts to pull troops away from the border. That could actually be the catalyst for the top in crude oil. So just as we saw a spike to the upside on supply concerns with the risk-off move, we would see the opposite most likely if we get an improvement in the Ukraine situation. So personally speaking, I don't want to trade crude oil next week because this market is highly exposed to the events in Ukraine, but it is interesting the way that would fit together with the scorecards suggesting a near-term top in crude oil and the possible improvement of the situation in Ukraine. The first pair I'm going to be looking at trading next week is Euro-Yen. We had this big sell-off to the downside and this looks rather scary. However, we have just looked at this exact same thing which took place a number of times in the past. And my base case scenario is that we see an improvement in the situation, and in that case I would be looking for the market to pull back. Really, in this kind of situation, you want additional confirmation. I would like to see it break into the upside first, and then any pullback, I'm going to be looking at initiating longs into the 133.13. If you are looking at trading any of these pairs next week, it's probably going to be a very good policy to take wider stops, because as volatility increases, you should take wider stops. And this event is really like any other event, like an interest rate decision. You don't trade them with tight stops, you take wider stops if you are trading these events, or if you're trading around these events. Next is Euro Franc. Euro Franc also saw this risk-off sell-off to the downside. If we get fears dissipating, what I'm going to be looking for, again, I would really like to see a reversal first like this, and then any pullback would be viewed as an opportunity to look for longs into the 1.0609. And what I'm going to do here is I'm going to look at the risk on currency pairs first, and then we will look at all the risk off currency pairs. The next market here we're going to look at though is euro dollar. Again, I don't really have a strong bias on euro dollar one way or the other, because as I said before, it does look like we could be forming an inverse head and shoulders, and if we're coming down for the right shoulder, we may just continue to correct here. The euro and the dollar are both fairly strong, and when two currencies are both strong or two currencies are both weak, you tend to just get a correction. That is exactly what we saw last week in euro dollar. The scorecards were telling us both currencies were strong, therefore there's a high probability for choppy moves, and we had exactly that. Well, the scorecards are telling us the same this week, and so I would not be surprised to see more choppiness in euro dollar. So I've put this in here because we cover this every week, but I'm unlikely to personally trade euro dollar next week. Next is pound yen. Again, this is a risk on move, so this is on the basis that we see an improvement in the situation in Ukraine. I would be looking for the market to correct somewhat, and then a reversal would be perfect. Any pullback, I will be looking into the 158.20 in pound yen. Next is pound franc. This is the next risk on move. Again, we saw the pullback here. Any improvement in the Ukraine situation, I will be looking at the market to start to turn, and any breakout higher, I will be looking for further advances into the 1.2630. I do prefer, as I've said multiple times, euro yen and euro franc to pound yen and pound franc. And the final two pairs here are Aussie yen and Aussie franc. We've already looked at Aussie yen. We saw this big sell-off, and we saw this previously with these kind of moves. Any reversal in this market, and again, probably a good idea to look for the confirmation of the reversal first rather than just buying the dip, or if you want to buy the dip because you believe the situation will improve, then you want to be doing so with a wider stop. But any pullback and a break higher will be viewed as an opportunity to look for further advances into the 84.29. And because this is the most risk on, risk off currency, if we see an improvement in the Ukraine situation, you could see the Aussie yen actually being the best performer next week. And finally here we have Aussie franc. This is my sixth favorite risk on currency pair heading into next week, and this is the final currency pair that I'll be monitoring around my base case of an improvement in the situation. Any reversal in this market is going to be viewed as an opportunity to look for longs into the 0.6695. Now, of course, if there is no hard improvement in the situation and the meeting between Biden and Putin kind of just peters out, goes nowhere, and we're kind of left in limbo going into next week, then of course you're going to be taking a risk trading any risk on pairs, because if something does happen, you're going to see all of these spike to the downside just as we did on Friday last week. So this is really in the situation that we get some good news and ideally some agreement between Biden and Putin over the weekend. Okay, so let's look at the other end of this coin, and let's start with Euro New Zealand. This is the first risk off currency pair. If we see fears continuing to mount over the situation, this is likely to tank the New Zealand dollar, the Aussie dollar as we've seen, and it will relatively start to add upward pressure into Euro-New Zealand. So any break higher in that situation, in the risk off event, and certainly if there were to be an invasion, you would see Euro-New Zealand spike to the upside, because that's what tends to happen in a crisis. You can see if we go back here just to March of 2020 or February of 2020 here, you can see this was the big risk off move that took place in Euro-New Zealand. There was the spike to the upside. See this? That is what you would likely see in a severe risk off situation in Euro-New Zealand. So what I'd be looking for if things start to deteriorate in Ukraine is any further pullback in this market would be viewed as an opportunity to look for further advances into the 1.7403. Next is pound New Zealand. Again, another risk off currency that you would likely see spike to the upside if there were continued fears over the Ukraine situation or it was to deteriorate. Any pullback then in this market would be viewed as an opportunity to look for further advances into the 2.0611. The third risk off currency pair here, which is essentially a backup currency, is New Zealand dollar. New Zealand dollar has been forming this big bear flag, and what you would likely see on continued fears are further declines as the dollar strengthens as a safe haven asset, and any break lower would be viewed as an opportunity to start to look for further declines into the 0.6491. And again, if you were to trade this kind of market, even in this area, you want your stop loss right out of the way, and you want to be taking a small amount of risk. You don't want to be taking huge leverage with very tight stops in these scenarios. And finally, Aussie dollar. This is the final risk off currency pair. Any deterioration in the Ukraine situation would likely see further declines in Aussie dollar. And I'm going to be looking down towards the 0.6933. So that is my Forex plan heading into next week. I am prepared to play this both ways if given the opportunity. However, my base case is for an improvement in the situation, and we see a rally in the risk on currency pairs highlighted here, just as we saw the markets reverse higher after the risk off moves we've seen in the past, such as the Syrian airstrikes or the North Korean missiles over Japan. And finishing up with stocks, gold, silver and Bitcoin. Starting off with the stock market, last week we saw a sell-off to the downside and a reversal to the downside in a number of the stock markets. That was primarily based off of the news we got at the end of the week. You can see we ended up right at the end of the week coming down, breaking lower. And going into this week, really we just have to look at stocks in the same kind of risk on, risk off mentality. If we get a continuing deterioration in the Ukraine situation, this is going to apply downward pressure to stocks. In that scenario, I would be looking for the SPX down to 4305.29. If we look at the Nasdaq, you can see it's basically the same setup. Any further deterioration, I'm looking for the Nasdaq into the 13784.98. And we also have the Dow Jones to the downside, and this is structured for a risk off move into the 34023.1. So the S&P 500, the Nasdaq and the Dow Jones are all set for risk off moves. And of course, if we were to get some kind of an agreement and the fears over the Ukraine situation were to dissipate, you would likely see stocks reverse into the upside in the Dow Jones above 35,818, in the Nasdaq and the SPX at the same time reversing higher as you see relief coming into the markets. Now, the interesting thing about stocks heading into next week is that the Russell, which tends to be a leading indicator of the other indices, is actually still structured to the upside after this inverse head and shoulders breakout. And we stopped just shy of the target of the 2107.8 last week. So going into next week, I would favor the Russell as a risk on market because it's structured to the upside, and I'd be viewing this exactly as we just looked at the Forex markets. If there is an improvement in the situation in Ukraine, you can look for further advances in the Russell as it's already structured to the upside after the inverse head and shoulders reversal. And I would be looking for a break above the 2107 and into the 2179.18. So even in the stock market here, if you're looking at the indices, you have the S&P, the Nasdaq and the Dow Jones structured to the downside. These are risk off setups, but you also have a risk on setup here in the Russell as it is structured in the opposite direction. So perhaps you could even think of this as the SPX being in blue, same as the Nasdaq, and also the Dow Jones as the risk off setups and the Russell in the risk on scenario. And finally here we have the Nifty. The Nifty really hasn't gone anywhere. It is still structured to the upside, but you can see it's starting to actually form a triangle type pattern. You see this when you get a high and then a lower high and a low followed by a higher low, and you start to coil. So I don't think the Nifty is a fantastic market heading into next week if this is just going to continue to correct like this. I'd much rather wait for this to break out perhaps on good news over the Ukraine situation, following US stocks up, if that were to happen, and then you can look into the 18 to 830. So with the Ukraine situation weighing on the markets heading into next week, the best way to approach this, if you want to trade, and of course you don't have to trade, but if you want to trade, is to have those setups in both scenarios and to be able to pivot to the markets which make the most sense as the situation starts to unfold. Finishing with gold, silver and Bitcoin. Gold is a very interesting one going into next week. It is now structured to the upside. And what's interesting is last week on the Friday, we had a spike to the upside on the Ukraine-Russia concerns, and this was a risk-off move. However, what's interesting about this is if we continue to get a risk-off scenario, then we can see gold rally. But at the same time, if we start to see risk-on moves and the dollar starts to weaken even further, because we've seen it already start to weaken in the scorecards, this could also lift gold to the upside. So gold actually becomes quite an interesting market next week, and now it's structured to the upside. I do think a position in gold with a wide stop next week on any pullback could actually be quite a good idea, and I think it's something I'm going to be paying close attention to heading into next week. The reason for this as well is because any pullback in gold before, if there is going to be a rally higher into the 1877.24, would probably be the last chance to enter before a major breakout to the upside. Why? Because if we scroll out here, and we talked about this in previous videos, how gold looks like it's about to explode one way or the other, and I highlighted in gold, we have this inverse head and shoulders. So we have a one up followed by a head and shoulders, one down. And in this scenario, any break above the 1877.24 negates the head and shoulders, and it's a continuation of the original break of the inverse head and shoulders. And everybody who's sold in this area and anybody still holding likely will have stop losses in this area. And if gold breaks the 1877.24, that is when we could finally see a big rally to the upside in gold. So my thinking for next week is, if that is going to be the case, whether or not gold continues to rally or it starts to sell off and has a down week, maybe because we get some risk on moves, the risk reward to the upside in gold for any pullback with an entry with a wider stop in this market seems to be very, very good. And I personally will try to take a position in gold on any pullback to see if we can get that breakout to the upside, because as I said, the risk reward on such a trade would be very good. So any pullback in this market would be viewed as an opportunity to go long, especially now we've reversed to the upside into the 1877, but just bear in mind, this is a point at which I would be looking for a major breakout to the upside, and I wouldn't want to book my profits short term. And in fact, purely based on what we've just discussed, the fact that gold can benefit from further risk off over the Ukraine-Russia situation, and also potentially a risk on move where we see the US dollar weaken because it's priced in dollars. I could even put gold in gold next week, because I think this is one of the better markets that I'll be keeping an eye on. But just be aware, like all of the markets, this can be affected next week by the ongoing situation in Ukraine, because it already was affected at the end of last week with this spike higher. Next is silver. Now silver is structured to the upside after reversing down in this area. I personally prefer gold heading into next week, and I probably won't trade silver purely because we have yet to see the US dollar turn bearish. The reason I was talking about potential longs in gold, A, because the risk reward of a breakout higher would be good, but B, we're seeing momentum to the downside in the DXY. We are seeing it weaken. It still registers as +1, but that's down from, I believe, 3 to 2 to +1. So we're seeing the momentum to the downside. So any long positions in gold is kind of jumping the gun a little bit, but you can do that from time to time if you have very good risk to reward on the trade. Silver, therefore, technically speaking, any pullback would be viewed as an opportunity to look for further advances. But again, I'm unlikely to trade silver because the dollar has not yet started to score negatively in the scorecards. And last but not least, we have Bitcoin. Last week, Bitcoin came up and took out the target set at the 45,650, and that was pretty much the high of the week. Any pullback here in Bitcoin is technically viewed as an opportunity to look for further advances. And the next key resistance to the upside in this market is the 50,218. Now, how Bitcoin would be affected by the ongoing situation in Ukraine, I honestly don't know, but it has tended to behave as a speculative asset, meaning that if there is an improvement in the Ukrainian situation and we start to see risk on moves, you would expect that to be supportive of higher Bitcoin prices. So that is it for me for this week, guys. The reason we're paying close attention to the Ukraine situation in this week's video, I know this has been going on for a while, and largely we have ignored this situation because it hasn't been feeding through to the markets. We're looking at it this week and heading into next week because that situation specifically caused a big risk-off move in the markets at the end of last week. That means we have to pay attention to it heading into this week, and that's why I'm talking about the Ukraine situation this week, even though I haven't been in previous weeks when we've heard all of this rhetoric or similar rhetoric before. If you don't want to trade next week, you don't have to. Capital preservation is always the #1 goal. But if you do want to trade, I would suggest having both risk on and risk off setups and trading the markets that make the most sense as the situation develops and more information comes in. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.